Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Friday out there. If this is your first time seeing one of my videos, welcome to my channel where I'll try to demystify all things mortgage related. If you find this content helpful, like and subscribe. So this week we had an improvement in mortgage rates after a rough rate week last week. And early on in the week, it seemed like just a bit of a regression to the mean after last week. There wasn't a whole lot of data to support the improvements in rates. Then on Wednesday, we had a big worsening of mortgage rates, also not really due to any kind of data. And then Thursday, we finally had some movement that made sense based on the data, and that was initial jobless claims coming in higher than expected. And that made up for GDP, which was also higher than expected, showing that the economy as a whole, this is for the third quarter, is moving along very rapidly. Then today, we had the PCE report, which is the Fed's preferred measurement of inflation, but it usually doesn't move mortgage rates as much as CPI because it comes out later in the month. And PCE came in right as expected overall, so not a whole lot of movement today. But what was very noteworthy to me is that the shelter component of PCE came in a lot lower than it had the previous month. We saw 7.15% shelter for PCE, which was the exact same as CPI. The difference is PCE has been steadily higher than CPI shelter cost until this month. So what that suggests to me is that CPI shelter, which declined only very slightly last month and had me a little concerned, I think that may have been a little bit of a fluke, and we should see it start to more steadily decline moving forward. But this is going to continue to be the data point that I'm most focused on. Now, next week, we have the Fed's decision on what they're going to do with their rates on Wednesday. The market has fully expected for a while now the Fed to pause the rate again, and I don't think that decision is going to really affect the markets at all. However, what Fed Chairman Powell says after that inevitable decision to pause rates definitely could affect the market. In addition to that, we have several reports that will measure the job market in terms of job growth. There's another initial jobless claims report and unemployment. So anything that comes in a lot higher or lower than expected could affect mortgage rates as well as Jerome Powell's comments. So as always, if you have any questions or comments, leave them below or feel free to call or text me on my cell phone number. But thanks for tuning into this one and have a happy Halloween weekend.